You're dealing with gold, and then you're dealing with the new version, which is crypto. Okay, so you have to think about that. I prefer gold. Okay, but that doesn't mean I'm into diversification. And so the reason I prefer, well, the reason I'm concerned about crypto is, first of all, privacy. The government knows exactly what you got, where it is, and it's also an effective way of taxing it. Whenever I was surprised, I realized, and often it was because of the things never happened in my lifetime, but happened many times in history. So I think we're in that kind of an environment, the changing world order, the changes. We have to understand the changes. So for that reason, I studied these changes going back for a long time. There are five major forces. The first is the debt, money, market, economy force. Credit produces buying power. That buying power makes things go up, but it also produces debt, and there's a cycle, and we experience those cycles. That's number one. Number two is the internal political and social order, the left, the right, capitalism, socialism, and so on. And that was where the election is, and we're going to turn to that in a second. Number three is the great world order, the change in the world order. We had a system coming out of 1945 in which the United States was the dominant power. The dollar's the dominant currency. They create a set of rules. How's the system going to work? The United Nations, the IMF, the World Trade Organization, that's all changing in important ways. That has a big effect. The great powers conflict, what's going on with China, Russia, it has a bearing on everything that we're doing. Number four is, through history, acts of nature. Droughts, floods, and pandemics have killed more people than wars and toppled more orders. So they cannot be ignored, and I don't think at this time can be ignored because of the fact that there's global warming, there's other things going on. And number five is technology, man's inventiveness of new technologies that makes productivity rise over a period of time. And there's nothing that's going to be more important than these new technologies. So we're going through a period of those five factors, I think, creating almost a time warp. And the world, I think, is going to be very different in the next 3 to 5 years as a result of those. They're interrelated. So you can't talk about one without understanding that interrelationship to me. So now we go back to the election. Okay. The real question on that election, going into that election, is, would we have domestic order? How would that take place? If you had, let's say, a close election, particularly a close loss by Donald Trump, then there was a question. Would you have an orderly transition of power? Okay, risky situation. We have crossed that. We are past that. We have a mandate. Okay, the president has a mandate, the Senate, the House, and now the Supreme Court, and so on. So there's something new going on. What does that new thing look like? Two things. If I was to take it domestically, it's reform. I'll talk about that in a second. Internationally, it's preparing for the war or the possibility of war with China, most importantly, and with other countries. Okay, now let's go into that for a second. Okay, that reformation is, it's a reformation of government, and it's a reformation of the whole economy. It's going to be like Donald Trump in the administration is going to be like a corporate office. It's a capitalist reformation, and it has some of those fundamental values. That's going down to the nitty gritty. Okay, what does that mean for technology? Like, we're going to have for 20% of our key chips have got to be produced in the United States by 2030. Okay, in order to do that, how do you do that? That's connected to an energy plan. That's connected. Okay, so there are a number of initiatives here. There's an immigration, there's tariffs, there's many things that are initiative. Internationally, it's changed everything, okay? Because we've come from a world in 1945, the New World Order. The world ended in terms of that, and we had a system, multilateral organizations and all this. Now we have we don't have that system. We have an America First system, and you have a China First system, and so on. So there are no rules of the game. That is a power thing. So we're now it's tougher to have allies. You're going to have deals, but you're not going to have allies. And so different part of the world. We're paying attention now a lot to the United States. Of course, the United States is important, and we're Americans in here. But if you really want to understand the world, you have to understand how it's changing in a broader sense. What does it mean in India? What is the ASEAN countries going to be like? What is the Middle East like, the Gulf countries, and so on? That world is changing in a way that we shouldn't so singularly look at through an American lens. Geopolitically, you're in one of three categories. You're on the American ally side, you're on the Chinese and other side, or you're neutral. You don't want to get involved geopolitically. So we're going to have, for example, two totally different technology systems that are going to develop, an American version, a Chinese version, and so on. But in terms of globalization, I'm finding out like we're more globalized than in almost anything. Like everybody's together, same group of people doing deals. Okay. Right. They come from all different countries. Never before in my life was it like this. So you can find Saudis and Indonesians and Singaporeans and everybody, they're all in the same group. There's a group and they're all doing deals. You know, my mantra of investing is 15 good uncorrelated return streams, risk balanced. Okay. So I want to start there, right? Okay, because I know that if I can pick good investments and they're uncorrelated investment, I won't lower my return because I'll have the average of those returns, but I will lower my risk by up to 80%. So my mantra is, what I don't know, what the risks are always out there. So that's when you first asked me a question, I think in that way you have to and risk balance them. It's not necessarily dollar balance.
Sure, and it's not just these. It's this combination, this basket, the all-weather portfolio that you are well known for.
So now if I step back from that and I think about, the world now, so that's almost like 7.5% in things that are uncorrelated. There are some general themes, okay? My general theme would be, first of all, that we have a debt issue. Okay, and when I take that debt issue, most fundamental of all markets and the underpinning of every market is the treasury market. It affects everything. So in answer to your question, you have to start with the treasury market. And there's a supply-demand issue there in terms of this. And I've seen this before. One man's debts are another man's assets. When we talk about currency as a storehold of wealth, we're really talking, is debt a storehold of wealth? So when I look at that issue, I think we have a big issue that's there. It's a big risk. So as I start to make tactical deviations from, let's say, what is a totally balanced, assuming I don't know exactly what's going to happen, my biggest, most important deviation is I don't want to hold much debt as an asset. And I think the Japanese example is such a good example. It steals money quietly. And the way it does that is people make the mistake of paying too much attention to their nominal returns rather than their real returns, how inflation eats away at that. So when I look at Japan, what they did on average over the last 15 years or so is they have a 3% lower interest rate than we had in the United States, and they depreciated the currency by about 4% a year. So you're losing 7% a year in the value. It's depreciated holders of those bonds because of the monetization and all of that. I think that there's a significant risk that will happen to us. So when I think about that balance, I think, now I don't want to concentrate any one bet on anything, but as I'm thinking about the bet, my biggest concern is that concern. If you had normal times and you say, well, what is the inflation rate? And then give me what the bond rate should be. I would sort of say inflation currently is in the 2.5%, 3% vicinity. You should have a 2% real rate. So you come out in the 5-ish vicinity without the supply-demand consideration. For those reasons, I'm concerned about rates. And I think people also pay a lot of attention to, is the Fed easing? And they think, rates will go down because of that.
Not exactly.
I've watched them go in two different directions for good reasons. Okay, so that's I look at the treasury market. The traditional buyers have been burnt in it and own too much. In other words, about 1/3 of all the debt is owned by foreigners, and they're owning it, and it's big parts of their portfolio.
Sure.
They've lost money in it. And then we've got not only the supply that is coming, a supply demand. So do they want to increase their market share? I don't think so in terms of the share of their portfolio. And then you put on that, that's just the new supply demand. The real issue, even beyond that new supply and demand, is if people think that that's not a good investment, you will get selling of existing debt. And if you sell existing debt and all of that debt, you can have a real disaster in the treasury market. And so that would force the central bank in. What does the central bank do? They buy the debt, they print the money, and so on. And so that scenario exists as a realistic worry. So when I look at the markets, I say 15 good uncorrelated, but what would I want to have a tactical deviation from? I'm not really excited about the debt. Okay. Right. Then when I look at equities, I think I have to look at the specific equities. The idea of talking about equity markets as a whole is an obsolete idea because they're so different. And, we're now in an era of disruption. So what disruption means is bad for one, good for another, and so on, and how that's going to change. Of course, the hyperscalers and so on done well. I believe that really it's the most greatest advantages are going to be on those who use it well.
Right.
And we're not paying enough attention to that. We're thinking, okay, did they make the chips? Did they make that? Okay. But the users, because they're in a war that's going to be a very expensive war. It's a war that's so important to them that they don't. There's not a question of whether there's a return on investment. What it means is it's more important than profits. It's more important than money. Okay. Which country? The country that has the best technology not only will have the best economics, but they're going to have the best military, the most. So these things are a war where profits can be a secondary consideration. But those that are benefiting from the technology and making transformations, like I think in investing, like I'm super excited because all of the times that my investing was, I would always write down my principles, my decision rules, convert them into algorithms, and I used expert systems to be able to build systems that would make decisions, computerized systems. I believe in that. Now, I'm very excited about what AI does in being able to do that. So I think that, and that's just only one area, but it exists in healthcare, exists in so many different areas. So finding those that are the beneficiaries versus those that are the detractors, the ones who are losing, but also getting away from really the superscalers and focusing on that, I think is important. So when I'm looking around the world for my 15 good uncorrelated return streams, these are the things that I think about. Well, I have a small percentage of my portfolio in crypto because what we're really thinking about is we have to think about what is the alternative money. Because a currency, is a medium of exchange. There will always be a medium of exchange, but it's a storehold of wealth. And so when you're talking about the bonds, the debt, okay, we have to think about an alternative money. And when we look at the United States and we look at other countries' currencies, they're all having problems, okay? So the same problems we're talking about in the United States are the same types of problems Europe has, same types of issues that China has. Am I going to own their debt safely and so on? And the same types of problems Japan has. So you tend to see them go up and down together. So you have to think about money. Money is, can I move it around? It's not like real estate that's knocked down and, right, nailed down, and then you also have it to taxes. So you're dealing with gold. And then you're dealing with the new version, which is crypto. Okay, so you have to think about that. I prefer gold. Okay, but that doesn't mean I'm into diversification. And so the reason I the reason I'm concerned about crypto is, first of all, privacy. The government knows exactly what you got, where it is, and it's also an effective way of taxing it. Because I was with central bankers when interest rates hit zero, a bunch of central bankers, and we're figuring out how negative can you make interest rates. The thing that limited the negative amount of interest rates was the paper. And so the answer to the question was, we can, for a very short period of time, have negative 400 basis points because of the fact that there's not enough storage space for all the paper. But okay, now, if you don't have the paper and you have it digitally, you can have as negative, it's just the same as taxes.
Right.
So when I'm looking at that, I think, okay, that is not exempt from crypto. Okay, and then the reliability of crypto in terms of, let's say, saying, does it correlate with inflation? Does it correlate with those things? No, it doesn't really, not well. It's still largely a speculative vehicle. So for those, and number 4 is also, it's not likely to be a reserve for a currency. Okay, it won't work. Whereas now, as countries need things, what is the reserve? Gold is still, it's the 3rd largest reserve currency, the US dollar, the euro, gold, and then Japanese yen. So I prefer gold, but anyway, whatever vehicle we're talking about, I think I'm saying, you have to think about debt as being, maybe you don't want one man's debts or another man's assets. You may not want the bonds. You do have to think of an alternative currency that's going to also allow your buying power. And a currency is something that can go from one country to another. And so there aren't many.
Ray Dalio essentially outlines 5 major forces shaping our world right now: the debt, money, market economy cycle, internal political order, changing world order, natural events like pandemics, and technological advancement. He sees these forces creating what he calls almost a time warp that will make the world very different in the next 3 to 5 years. When it comes to investing, Dalio sticks to what he calls his mantra, having 15 good uncorrelated return streams that are risk-balanced. It's interesting how he emphasizes this isn't about dollar balancing, but about finding truly uncorrelated investments to reduce risk while maintaining returns. He's particularly concerned about the treasury market and debt issues right now. He draws an interesting parallel with Japan, pointing out how they've effectively been stealing money quietly through a combination of low interest rates and currency depreciation. This has him worried about holding debt as an asset. On the equity side, Dalio makes a fascinating point about how we need to stop thinking about equity markets as a whole because they're so different now. He's especially interested in companies that are good at using new technologies rather than just the companies making the technology. He sees technology as part of a larger competition between nations, where profit isn't always the primary consideration, it's about national advantage. Regarding the gold versus crypto debate, Dalio leans toward gold, while still maintaining some crypto exposure. His concerns about crypto are pretty practical. He worries about privacy, since governments can track everything, the potential for negative interest rates in digital currencies, and crypto's current nature as more of a speculative vehicle than a reliable store of value. He points out that gold remains the 3rd largest reserve currency after the US dollar and euro, which gives it a significant advantage in his view.